It's one of the greatest market environments you'll ever see. Let's talk the melt up on the weekend update. Okay, friends, let's talk the melt up. Here's what you need to know. First up, what is a melt up? Well, when we talk about a meltdown, I think we're probably talking about like nuclear reactors melting down, where the reactor doesn't get cooled and it starts running hot. Chernobyl sort of situation where it melts through its containment vessel into the ground, and then I think theoretically all the way to the core of the Earth. I think they call it China syndrome, something like that. So anyway, so that's a meltdown. What we have in the market is the opposite of that. We've got a melt up, where just like the reactor melts down into the Earth, the market is just kind of like floating every single day higher. It's one of the best market environments you can ever be in. And we've only seen a few of these. If I look at from the global financial crisis forward to where we are today, there's only been about maybe 2 to 3 separate times in my career that I could characterize a market as authentically a melt up. So let's take a look at the market, same way we always look at it. Red is the S&P 500, orange is the 50-day moving average, purple is the 200-day moving average. And what do you know? You know that the market's going higher, almost vertical ascent here. This is what the melt up looks like. Each and every day the market goes higher, and it's pulling up the 50 and 200-day. And obviously, if I were to look at this market and give you the diagnosis, it looks fantastic. It looks really good. Nothing bad to say about the market here. I expect that this melt up is going to go all the way through to the end of the year. And you've heard me say this a couple times before, but I think there's some good reasons why that's going to happen. And here's why. You might ask the question, like, why are we in a melt up in the first place? Well, here's number one. There is little to no tax loss harvesting flow. Now, for those of you that don't know, every year, our firm and numerous firms around the country do this thing called tax loss harvesting, where we sell our losers, give you a little bit of a tax break at the end of the year. Well, the problem with this year is everything is up. So because of that, there's no tax loss harvesting flow. There's nothing that needs to be sold. And so what happens as we get into holiday season, as we get towards the end of the year, there's only buyers. There's no sellers. And so if there's no sellers, every time the buyers show up in the morning, they're just going to keep lifting the market each and every day. Number two reason why I think we're in a melt up, well, I think we've got rate cuts for the foreseeable future. It's unbelievable to me that we're going to cut rates with markets at all-time highs, with, stocks just chugging along, corporate profits strong, and we just keep cutting rates. So we're just sort of like pouring gasoline on the fire, and that's going to keep the market buoyant. Market loves rate cuts. The economy loves rate cuts. So that's, again, another stimulus. So now we have got no sellers, and then we've got a little bit of accelerant coming onto the market. We're going to hear more about that next week as we, or not next week, the following week, as we hear from the Fed expected to cut another 25 basis points. And then finally, I think as we look towards next year and as we look towards what happened with the election, clearly, Trump's election kicked off sort of like this speculative mania that's happening in the market. There were plenty of things that, we were pricing in only 50% odds of Trump getting elected. Now that he's been elected, you have to price in 100% odds. And so there's just like a very strong catch-up trade going on right now. But as we look forward to the next 4 years, he's got a $10 trillion spending plan. And the lesson that we learned from the pandemic was that where we spent $4 trillion that we didn't have, $4 trillion can move things higher very easily. What's $10 trillion going to do? And so this removes, even if we had some sellers here, this kind of knocks the rest of them out. Everyone is just kind of content to hold, to push into next year's tax year. So for 3 very strong reasons, we're in a melt up. I think it carries through all the way through till the end of the year. There you go. That's the markets review. I'll see you next week for the news review. Take care. Okay, friends, that was the video. Hope you liked it. If you found it informative, good, entertaining, I'd love if you could scroll down here beneath the video and give me a like there. It helps us out with the algorithm. And then if you want to be notified first of anything new that we upload to the channel, if you come over here, click subscribe, you'll be the first to know as soon as we upload anything. Appreciate it. See you soon.